Good morning, this is Frontier Opening Bell. I'm Temple Ashaju. Chimao Kadike Consumer Goods Analyst from Vertical Capital Management joins us this morning on the show. Thank you for coming through. Person Omofaya, Executive Editor here at Frontier Africa Reports. Thank you for your presence on the show this morning as well. Let's begin with the markets where Nigeria made a bit of a recovery yesterday, up some 41 basis points on Tuesday. BRVM Stock Exchange in Ivory Coast was also up some 0.09%. Egypt, the Cairo Stock Exchange there was down 0.28%, and Nairobi Stock Exchange made a comeback as well, 0.18%, while the Johannesburg Stock Exchange in South Africa was down some 0.41%. Looking now at the Eastern African headlines, you've got Kenya petrol prices hitting 122 shillings 81 cents per litre, while power prices are also set to rise. Eveready EA PLC, East African PLC, appoints Thomas Masaki as acting MD, that's managing director. You've got Uganda's Auditor-General warning that debts could be touching some unsustainable levels at this point. Tanzania gold exports was up from $666.9 million, $2.97 billion in February 2021. And Albert Muchenge, the Zambian former ambassador to Ethiopia, in today as the AU Executive Commissioner for Economic Development, Trade, Industry and Mining. Bosun, let's come to you with these headlines across the Eastern African hemisphere to help us understand what they mean for the markets.
Well, a few of these points I'll just touch on, maybe just two or three. In particular, the petrol prices for Kenya is looking very surprising because Kenya is not producing crude oil in commercial quantity right now. The initial plan was to start. A few companies came in from around the world, Tulu Oil and the rest of them, but then it's been suspended again. The Kenya Petroleum Company, which is the face like Nigeria's NNPC, ran into massive debts last year. It's all in the news all over the place. The country is yet to start exporting crude oil, but already the National Petroleum Corporation of Kenya runs billions and billions of deficit already. So Kenya is kind of putting off petrol production in commercial quantity until some time later. But this is not so surprising because crude oil prices around the world have touched very close to 70, touched 70 twice within the last, since we started the year. So I think that is expected. And that will also flow into the electricity prices because, again, you need feedstock for the KenGen, which is the Kenya Power PLC as well, which both of them listed on the stock exchange. So quite a whole lot of a story there that we're keeping an eye on. So we need to keep that in mind. The other issue relates to Uganda's Auditor-General. I think this is one good thing. We don't seem to have that within the Nigerian space. It's very rare in Africa to find the Auditor-General or the head of the debt management office saying the country's debt has reached unsustainable level. But we see this in East Africa, a bit in Southern Africa, in which the central bank governor, the minister of finance will go straight head to head with the president, go head to head with any other government and say this is totally not what we think we should be doing. Let's do it differently also. And you heard that from a number of these countries, so it's a different story. Finally, on Tanzania, gold exports massively, $2.9 billion last year. Look, everybody was looking for gold last year. Gold was the king, was the king of assets last year, except Bitcoin again, by the way. So we all understand. So then you have the stock market also doing did a lot well as well. So I think Nigeria and a few other countries can still see value in gold. 1,700, 1,800 is still good money. We saw $2,000 last year per ounce. Silver is still good. Nigeria was trying to dig for about 500 million naira, $500 million, whatever gold they were doing. But right now, the whole Zamfara area where you have the rich deposit of this has been locked down in the manner of speaking and all of that because of insecurity and all that. Each time we try to get something done right, something just seems to crop up almost all the time. and dog us down, and we seem not to be able to move on. And this is quite interesting now that as government was now looking for gold, talking about gold in Oyo State, in Zamfara State, in a few other places, suddenly we have insecurity and whatever on our hands, militancy, banditry, and then we don't seem to be able to make a show of it. But I like the Eveready story, by the way. We used to have a company in Nigeria called Eveready. It produces battery, by the way, called Eveready battery. It was in Nigeria when we were growing up. Local industry. It since died off. But I'll tell you one thing. You find a whole lot of companies that are no longer operating in Nigeria that close shops due to our massive imports that are operating in East Africa. Eveready is one of them. Bata is one of them. It's still listed on the Uganda or Tanzania Stock Exchange, for example. You find some of these companies that are no longer here, but they're still existing over there. So sometimes you wonder what happens to us.
Thanks a great deal, Bosun. Chima and I do not know about Eveready. We're too young to know. But I know about Bata, and I'm sure Chima too knows about Bata. And thankfully, Bata is back to Nigeria. Chima, do you have any contribution to these gold exports from Tanzania as it relates to Nigeria? Is there any sense you're making of it as Vetiver Capital Management?
I think I'll defer to Bosun's expertise on the East African market in general. But I think that one story that kind of resonates with me because of how it relates with us, we kind of are in a similar situation, is the petrol price situation in Kenya rising, and also power prices that are set to rise. I think it is something that we should expect, especially given the rising prices. We all pray for all prices to go back up so that we can have more revenue. And now that is happening, but we're also still having to face repercussions when we get to import refined oil. But for Kenya, I think it is more peculiar, especially given that the capacity to export crude oil is not so large. I think I was looking at an article in 2019 where they said they put their export capacity at 400,000 barrels a year, which is, I don't think it's very significant. Now, if you also keep in mind that they also have to import refined oil at these high prices, then it might just be something that we have to look out for. I wonder how many other countries will have to suffer in this regard due to low refining capacity and not a lot being done about it.
A great deal for that, Chima Okadike. Let's move on to the Western African headlines we've got. More diversified private sector will help Nigeria's economic recovery, says IFC's Essian Lori. That's the country manager in Nigeria. USSD charges now a flat fee of 6 naira 98 kobo per transaction. That's in Nigeria, that's about 7 naira. Nigeria's February inflation up 17.33%, while food index hits 21.79%. World Trade Organization's Director General, that's Dr. Ngozi Okonjo-Iweala, and CBN's Godwin Emefiele are in talks of virus vaccine support, etc. You've got Ardova PLC proposing some 60 billion naira bond program. Congo offers $182 million 5-year local bonds to repay debts and, of course, fund projects. I'll start with you, Chima, especially with Ardova PLC that is proposing 60 billion naira bonds program. I know that is one of the companies in your basket at Vetiver.
Thank you. I don't particularly cover Ardova because it's in the oil and gas sector exactly. But regarding this bond program news, if there's nothing final yet, it's not even certain that we are going to be seeing this out in the market. It's just for now a proposal. But I'd like to just state that depending on how they're able to come out into the market, we should see better rates with this bond program. For instance, we already know that in fixed income market we're seeing better rates already compared to last year, at least if 3 months ago. So we know that if Ardova ends up coming out with this bond program, we should be seeing higher rates, which is something which bodes well for investors. Also, I should also state that we're seeing increased debt instruments issuances. I think a lot of companies have had to, restructure following the pandemic, and looking into this new year and trying to recalibrate on how to progress forward into the year and trying to recover appropriately. So I think it's something that we should continue to look out for. We will continue to see a lot of companies coming into the market to get more funds from the market. We may not see equity issuances as much, but I think we would see a lot of debt instruments being issued. And in terms of rates, like I mentioned, we should also see favorable to investors. So I think that is some good news that investors have to look out for. Also, if I could go on to other news.
Absolutely.
Okay, good. So I'd also like to speak on the USSD fee change. I remember when we saw it. I was speaking to somebody yesterday, and when we heard the news, we were like, wow, why is the CBN doing a lot of all these things? Why are all these things happening? It's very funny because according to this price framework now, it's actually a reduction in what it used to be. Now, a lot of people do not know that was the first reaction was the CBN has come again, and all this and all that. And I think it's very, very funny. But looking at the effects it would have on transactions, so earlier we had that the initial framework was that for every session, that's 20 seconds of transaction, you have to pay about 10 naira per session. So a session is 20 seconds. If you're trying to carry on a USSD transaction, it takes more than 20 seconds. If it takes maybe 40 seconds, that's 2 sessions that you have to pay 20 naira, from my understanding. But now, for the whole of the transaction, even if it takes hours to do it, as long as you've just done one transaction, you only pay 6 naira 98 kobo, which is a very good development. It also fosters the cashless policy that the CBN has been trying to promote for years. So I think one thing that CBN should try to promote more is how they communicate these circulars or these messages to people, so that the reaction is a lot better. Because, like I said, the initial reaction to this was, they've come again. When would they leave us alone and all that? So yes.
Thanks a great deal. But when you go now into the details, you were able to understand it better, and thank you for helping us to understand this as well. Also, let's get your thoughts on all of these headlines as well, the regulatory part, and of course, possibly the corporates.
Well, I think I'll just speak to just one or two, and I agree with Chimauka Dike. You see, we still got a problem with communication when it comes to those who are in the communication business with government agencies. When you look at that press statement yesterday, the knee-jerk reaction was that, oh, here comes the central bank again. The whole headline was screaming, central bank imposes 6 naira 89 kobo on USSD transaction, and everybody runs away with the word imposes as if it's a military rule in Myanmar or somewhere in Vietnam. No, it's just the fact that just go down 1, 2, 3, 4, 5 lines down the line, and you find it there that it's just removed what she just explained, explained, and just give you a single cost for the entire transaction. So first, they didn't do their homework very well between the central bank and the NCC. I don't know who was responsible for the final joint statement, but they didn't do a good job. So I'm going to call out both the central bank and the NCC. You did a bad job in communication. Simple and straightforward. You had a good decision. You communicated to an impoverished economy in a way that will steer people up first before they get the details. That's by the way.
But boss, if I could just jump in there, is there a way this new charges on transaction addresses the over 40 billion naira debts on ground between the telcos and the banks?
Look, the relationship between telcos and the banks, between central bank and NCC, is beginning to unfold. Remember, the telecommunications is a new economy. Central bank is an old banker, all this while used to the big mortar economy. So the handshake between the fintech people, the telecoms people, and the financial services regulator between NCC and CBN and other operators will start getting warmer by the day. So these are early marriages, whatever it is. Look, they just started dating. They're going to get better at it as time goes on. It's going to be in the best interest of Nigeria. They will need to understand themselves very well. The telcos, the ICT companies, whatever, want to hit the ground running. But once you touch financial services, Then the central bank says, excuse me, wakes up and said, excuse me, can you guys just slow down? Can you tell us exactly what you're trying to do? But the telcos and the ICT, digital, whatever wants to just hit the ground and keep running. The role of the regulator is to say, thank you very much. Can we understand what you're doing first before you start moving on? So that you don't hurt people unnecessarily, if either knowingly or unknowingly. So the role of a regulator is far deeper than some of our folks understand it who speak on social media. The role of a regulator is that of a parent. Look, kids can play around the house, but again, as soon as you begin to notice that they turn on the gas, if they are 4-year-old or 3-year-old, then you begin to say, excuse me, what are you guys trying to cook? Don't burn down the building, they don't blow it up. So you understand, but as long as they keep to play, everybody can play. So for me, that is the issue here, and I think I love this. I love this. I think they're getting better. Remember the MTN, CBN, whatever issue a few years ago was a little bit messy between NCC and CBN in terms of who should be in charge of the tax. FX was involved, and once FX is involved, central bank comes in as a banker to the government, and they almost have the last say when it comes to that. It involves the NSC, transfer of shares, blah, 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 blah. So to keep it short and simple, the central bank, anything that you touch once it involves transferring money or financial asset or whatever, between SEC and the central bank, someone is going to flag you. So I think our guys in the ICT, telecoms, whatever, should understand that, and it's everywhere in the world. In particular for a developing country in Nigeria, where we don't have robust, technologically advanced form of regulation. So we need to understand that as well, that our regulators here are not in the same box as you have in the US or in South Africa or in the UK or in Germany or even in China. So we need to give them that they're just getting along as it, because the economy itself is still largely rudimentary, by the way. So you can't have a 24th century central bank for a 19th century economy. It's not possible.
Okay. All right, and thank the great deal, Bosun. Let's move on to the Southern African markets. You've got Anglo-American PLC issuing 2 senior notes worth $1 billion due 2028 and 2031. Shoprite sales up some 4.7%. Shoprite concludes sale of interest in Nigerian units. Sony International got some 1.1 billion rand headline loss for full year 2020 on the pandemic. And of course, Eskom CEO says power shortfall could rise as SA economy grows. Namibia now says Moody's expects debt to hit 74% of GDP in 2021. Let me hear your thoughts on this headlines. Chimba, especially on the Shoprite story there, the sale of the Nigerian units. What are you making of it?
Yes, in the Shoprite, because, okay, women do more shopping. Okay, that's okay. I understand. I give that to her. Okay, fine. Okay, shopping for women, she goes first. Okay, shopping, Shoprite.
Absolutely, Chimba.
Okay, please go ahead.
Okay, thank you. So for the Shoprite story, I think I tried to search for more details on who the sale has been made to and what the details were exactly, but I don't think that has been put out yet. All we know is that it's going to remain as a franchise in Nigeria, so your Shoprite name will remain with different owners. Well, I think that is good in preserving the jobs that are already around that. If we decide to, remain in the current structure and all that, I think that is very good with preserving jobs. But I think it also speaks to a deeper problem or a deeper need. If you look at Shoprite's presentation of their results, you look at their South African-based businesses and how it is progressing. Even in the pandemic year, they still reported growth because it's the consumer goods sector. People still have to buy things, people still have to shop, and that should support growth in that sector, in that business. But if you look at the Nigerian business, they kind of reported lower or depressing numbers, which does not bode well for a company that is here because of the growth or because of the potentials in your economy. Whenever people speak on Nigeria, they say Nigeria is a fast-growing country. Population is increasing, so that kind of means that people have to spend a lot more, and it bodes well for companies that are coming here to set up in terms of sales. But if that does not, if year on year, you don't see that affecting your bottom line, you don't see how it is really improving your your company, then it just makes sense for you to exit. And at the heart of it is kind of is increased costs. If you look at the cost of sales for not just Shoprite now, for many of these companies, you see that a lot of it is in fact is affected by raw materials costs. They have issues in transporting costs, transporting goods from the port to their business, raw materials or otherwise. They're facing issues with inflation. Just yesterday, inflation reports came out at 17.3%, which is very, very significant. If you look at all the things that are affecting inflation, the inflation numbers, you have increased PMS prices, you have access to food or increased food inflation. All these are things that affect companies directly. So it kind of brings home the point that is Nigeria really a good place or a good destination for investments? But we continue to see the FDIs dwindling here and there. Over the years, we've seen dwindling FDIs, and we notice it. But what are we doing about these dwindling FDIs? Now, one huge investor in our country has left or is leaving. Maybe it's positive that they are transferring assets to somebody that is going to still maintain it in Nigeria. But what is the mentality for other investors out there? Are we giving them the impression that you can't come in and thrive for a number of years as you had hoped? Or I just mean, where do we go from here? How do we correct this mentality, and how do we make it a positive for us? We have the numbers, we have the consumption. We can't have the consumption. What do we put in place to support this?
All right, then. Thanks a great deal, Jim. I mean, like someone said recently, it is a hard time to be an analyst at this point in time. But let's speak on to you, Bosun, with the rest of the headlines before we finish off shortly with the Northern African markets.
Yes, I think we have a bit of an issue with the Shoprite. Shoprite is closing shops in a number of African countries, and Nigeria is not an exception. Even though we have fundamental issues with being a country in terms of being an investment destination. But I think a number of chain stores in Africa are having serious problems. Nakumatt is having problems between Rwanda, Kenya, and the rest of them. There is a retailer that is like Shoprite that came all the way from Botswana, expanded into Kenya, Tanzania, Uganda. They are closing up and they're going back to the home country. So I think, in the manner of speaking, retailing business and taste and culture of each country is different. And from all what I'm seeing, it looks like you're better home because you're doing what you know how to do at home. So when you look at this Shoprite story, 4,300 and something or 3,400 and something jobs in the second half of last year within South Africa, that's big news. Okay, and they make sales even with the pandemic. They see the reported sales of about almost 4.7%. That tells you that they've seen the strategy that, look, it looks like Nigerians love foreign things and whatever, but when you really take it really down the line, the bottom line is still that people somehow in Africa, our culture, our affinity, our tastes and everything still relate to us as we are. So when we love the brand name and the very sexy atmosphere, fully air-conditioned, looking nice and sweet, you can stroll in, take nice pictures, selfies, whatever, we love it. But when it comes to taste, there are certain things that we don't compromise as Nigerians or as Africans. So I think I'm seeing that in the story, because I follow the Shoprite story, then I follow the Nakumatt story, then I follow the one from Botswana, and I'm seeing the same pattern here, that this may change. But I think what the bottom line is for Nigeria is that the Nigerian owners, those who provided the land and whatever, or the brick and mortar, are likely going to buy this, the one they are negotiating with to buy with. Now, the point is whether they will retain the Shoprite brand. I mean, within those buildings will remain to be seen. Okay, so they are not closing shops, but maybe Shoprite will pull down a signboard or signpost in Nigeria, and it will now bear another name. That is another thing that you like to see. And again, if you look at our neighborhood, and I'm sure Chim has seen this, a number of smaller retailers are setting up neighborhood stores, are setting up all across Nigeria. So you can find a name that is local, all right, that will buy that will now be an indigenous name. If they do that and they continue to keep it there and supply Nigerian goods, food items, whatever it is, and that, I think it's a win-win situation for us if we can manage it. I think it's just be that the South Africa help us build that culture of shopping malls, whatever, and they transfer it to us, and I think we should say thank you to them.
And that is a global trend. That is a global trend. Thanks a great deal, Bosun, for that. We've got a minute or two to go. Let's look at the Northern African headlines here. You've got City Edge securing 1.1 billion Egyptian pounds loan from NPE Bank Reserve. Saudi Shoprite is to invest fresh 9.35 billion Egyptian pounds in Egypt. And you have the Financial Regulatory Authority of Egypt agreeing or approving Mohandes Insurance to raise some 235 billion Egyptian pounds in that country. Help us to understand this from your continental perspectives of the markets, Bosun.
Just only one point about Orascom, a very big company with a whole lot of, like a holding company doing cement, a whole lot of other things, telecommunication, I guess, and all that. And they're doing pretty well. Last year was tough for everybody, by the way, and you can see that also in the books of other companies reporting within the same period, especially for those in banking and a few other industries within whether it is Northeast or Southern Africa. Mohandes getting the okay to do, and so look, insurance consolidation is going on everywhere across Africa in financial services space, whether they are banks, insurance companies, holding companies for financial services products, and PFAs and the rest of them. So I think it is something good, and I think it will continue.
Thank you so much, Bosun Omofai, Executive Editor here at Frontier Africa Reports, for those analyses. Chima Okadeke, Consumer Goods Analyst with Vetiver Capital Management, appreciates your presence and insight on the show this morning. This has been Frontier Opening Bell for today. I'm Temple Ashaju, and I'll see you next time. Bye for now.